Okay, we are live. Hi, everybody. How's it going? Okay, so we will cover the market today, like we usually do on Friday. And it's nice. We had some a little bit of action in the last few days. That is very good. So let's put it all in context. Let's start our review. So usually we start with this chart. It is let me fix it. All right. So we start with this chart because this chart is like is one of our indicators. We call it cycle comparison indicator. So in this chart, we plot the usual power law, that is, in this case, is the white line that you see. So it's basically the general trend, right, due to the power law. I can zoom out and you can see it. But you are familiar, right? Like we say many times, I want to use TradingView mostly because it's something that everybody has access to, and also, it's very good. It gives us real time data, and people can interact with the app. It does have some limitations. One of the main limitations is that, unfortunately, we cannot take the log of time, mostly because, beside Bitcoin, where the log of time is very useful because it shows this very regular trend. There are not many other assets that follow power laws. In fact, I think it's unique, in particular over so many different orders of magnitude. So, maybe it's something that we will do. Everybody should write to TradingView and ask them to add the log. I don't think it will be very difficult for them to do that. Right now, we can only take the log of a y-axis. We do all the calculations to calculate the slope, to calculate the trend, like if it was a power law. But and you can show that, right? It's just that you know what happens. Instead of showing a straight line, it will show a curved line. Now, in theory, there is actually, if you play with the code, there is a way to do that, but you will have to create kind of a dock x-axis, and then you will see this beautiful straight line. It will be fantastic if we could do this by just simply clicking a button here, and it will give us the beautiful straight line power law that is so remarkable. It's a wonder of nature when you look at it. But we cannot do that. So we go back, unless we code, etc. And even these, there are limitations. The graph is not really flexible and so on. But let's go back to the usual view. Okay. It's this one, where we can compare the different cycles, right? So here I have two models. I have what we call the simple model, that is a straight line. I'm adding a line here that is supposed to represent the support. Then I have what is called the full model. The full model. So there are all these debates on, because the beauty of a power law is not just the general trend, but also how incredible these support line is, right? You can find this support line in different way. In this particular TradingView indicator, we calculated in the simplest possible way. That is a 60% deviation. Basically, it seems that we never went below this wide line, but we think there are physical reasons behind that. Something to do with how much it costs to produce Bitcoin. That is the theoretical reason why we have this line. And it's incredible to have an asset that has a reference like that, right? It's not something that somebody drew, that is arbitrary, that is based on feelings. It's math, and it shows that we never violated that line, and it seems to be connected with something that is fundamental for Bitcoin, right? The cost of production of a good. So we together, with the main line that represents kind of a compromise between the peaks and the bottom. These two pieces of information are very important, but we don't have an equivalent for the top. We don't have a line that we could draw and say, oh, all the top seems to be confined by this line. You can draw a line that is similar to this, that is a large deviation, and then usually that line tells you where regions that are probably close to the top, or where the price is for sure overvalued. Maybe it doesn't indicate completely the precise top, but it's why we created this other addition to a model, because once you have a model, you have some foundation, you can always add layers, right? You can add a complication, you can add, okay, this is a general trend when there are oscillations. You can do your model, add to your model level of complications, right? Or level of details to reproduce different aspects, because really Bitcoin has two main signals. There is a general trend, and then there are these oscillations, right, that happen to very precise place. And what this graph is trying to show, that they are periodic, this oscillation, with the exception of the first oscillation, the first bubble, because this bubble, we can treat it as a special case because it happened before the halving. It doesn't follow the same behavior, let's say, than the other ones. But all the other ones seem to be repeated at the same time. They start at the same time, about 1 year before. And if you have seen these shows, it's something that I repeat every time. But maybe I do this maybe for new people that haven't watched the show before. We always start from the general view. We have 1 year up, 1 year down, and then 2 years close to this bottom of a power law. The overall result is still a power law because the bubbles basically cancel. So this is our conceptual understanding of how the cycle happens. In general, we follow the power law, we deviate from the power law for 1 year, we come back to the power law, and even how it happened, it follows very, very precise regularities. The peak seems to be always around Q4 of a year where we have a bubble behavior, where we have a bull run. Last time we had like kind of a double top in a sense. But the peaks, the real peak in our philosophy, in our understanding of Bitcoin, always happens in Q4. And here you see we use this terminology of the hours: 12, 3 for the bottom, 9 when the bull run starts. So this gives it's a beautiful thing, because if the cycle continues to happen, and this cycle is going to be a very strong confirmation, because one time you don't have a pattern, 2 times, that is curious, right? 3 times, okay, 3 times you start to have a pattern. It's a very, it's not yet confirmed, because 3 don't make a crowd, right? It's interesting, right? And you will think there is a pattern there, but the 4th one will make a strong, if really everything happens as before, and we can calculate it and we can predict it, it will be amazing, right? It will be a confirmation with this unifying vision, right? Like theory of everything for Bitcoin. That is what physicists are always after. Maybe this is a bias from a physicist. We like to have kind of unifying picture of a phenomenon. So this is a bias. I admit it's a bias of a physicist, but it will be beautiful if we can describe Bitcoin with this very precise pattern. People are a little bit concerned because they say, "Oh, but if everybody knows, then maybe the market doesn't follow what people think it should do." Well, first of all, not many people follow the power law anyway. They refuse. You guys are the elite in a sense. And also, I don't know, I don't think so, right? Because there are these financial cycles like microcycles that are very periodic, and they continue to happen. The PMI is one of them, right? Why it follows a very precise pattern over the years, and it's like relatively clockwork. So why not Bitcoin? So anyway, but we will see. In science, you always want the evidence and the data, and all what we can do is to compare. So far, this cycle have been very, very regular. Now, how do we look? How things look like at this particular time? Because we say the fourth cycle started, right? And I already mentioned this in my previous episodes. If you do a one-to-one comparison, this is why I love this indicator, because you can go down. Every time you go down, basically all what they did, I went back 4 years. So how this behavior will look like if we go back 4 years. So in the graph, every time you go anywhere in here, you're comparing to what happened 4 years before. And if you go one layer down, it's 8 years. I should add 12 years. You get 12 years if you go here, but it will be nice to have it all aligned. I need to do that. And you can see then the different cycles, how they look like. And, they kind of have their own personality. But in general, we leave the power law behavior at the end of the year. We kind of already cross this purple line that I draw here. I prefer to use, some people, different people do it in different way. It's okay, right? Different people can do different things. It's just when, what they do when somebody goes too far away from what is reasonable, right? Like plan B model that is ridiculous. If it is ridiculous, I will tell you. But things that are relatively similar, like, okay, I'm going to count days from the halving instead of from the peak or whatever. These are personal choices. People can do in different ways, and they should give similar result. One thing that I want to say, though, that is very, very fundamental, because I have seen other analysis, right? So there are some people that, and I can mention, not because I'm trying to critic them, but so you can compare what we have done. And as always, I'm not trying to put down people. I'm trying to have a scientific discussion, because I care. If somebody tells me this cycle looks like 2017 and then it doesn't, for me it's important. I want to know. I want to know what to expect. I want to prepare, So it's not just a question of opinion. Oh, you think this, I think what the data shows. Why? This is the entire idea of looking at data. Data should give consistent, converging answer, even if you come from different angles. One of the things that I heard a lot, for example, Bitcoin Magazine does this. I don't know why they do it, okay? They have some of their analysis are okay. Others, I don't know. It seems they don't do it like a scientist will do it. If there is a pattern in the data, you don't want to take the bottom, right? You don't want to take the bottom and then calculate the percentage change. You could, but you will arrive, if you compare then what happens in pure percentage change, right? Let's say I take the bottom and then I look at where we are relatively to that in percent. If there is a trend, a general trend, this trend is, as for example, diminishing returns, like the power law, it will not make sense to do that, because, for example, we were going much faster up just due to the power law alone early on. Early on, in the if you go all the way to 8 or 12 years ago, if you go to the first cycle, we were going up about two times in a year, only in 1 year. So if you're comparing, usually it takes 2 years, from the bottom to the let's say right now, we spent 2 years here at this in this region. We will have gone much, much higher just by the power law alone. If you don't subtract that, you will arrive to wrong conclusions. It doesn't make sense to compare in that way. You have to do it in a way that is logical. So if the fact that there is a general trend, it needs to be included. You need to correct for that. You need to take that general trend first, and then once you have whatever is left over, then that change is all due to the cycle, the behavior of the cycle. So this is how we do it. We take the general trend because it's evident, it's there. Whoever tells you it is an illusion, etc. They don't know literally what we are talking about. It's there. It's real. It's math. It cannot be denied. People that know how to play with the data. They have done it so many times in different ways, and they have shown there is a general trend for the Bitcoin price. That general trend needs to be subtracted, and then whatever is left is what is unique to that particular cycle. And this is kind of what we did here, right? We take out the trend. Now, the other issue that needs to be also considered is that if I just did this by taking the trend, the first peaks will look enormous, and it will be very difficult to compare because we went all the way to like 10 times of 15 times if you take even the first bubble before the halving. And so you can compare it, but it will be meaningless comparison or a difficult comparison. It will be difficult to interpret. So a better way is to account for also this decay. You see, there is a decay of a peak because, like we said before, the first, see how steeper this line is, right? In comparison with this, you can see by high, they go down, right? They becomes less steep. So you need to consider that, and you need to account for that. And you can do it in different way. You can measure actually there is a real exponential decay that is going on. But another way that actually I think it's a very strong clue on why we see this decay in the first place has to do with the power law itself. The power law predicts a decay that is this diminishing returns. It's in the formula. This is how you get a power law in the first place. It's basically an iterative process where there is a decay that is inverse, that is proportional to 1 over time. So you have this decay that is already in how the trend works in general, and it affects both the general behavior but also the peaks. And if you correct for that, and you can do it by price, by volatility, then the tops are comparable. And you can see they're all comparable here. Then if you take the average, right? So this is a scientific way of doing it. You take the average of these trends, and you see there is a pattern. There is this blue line that is the average goes up during this time. It goes down. There is a decay. Okay. And then it stays flat. That means by staying flat, it's actually another way of showing that there is a real trend there. See, the trend is this thing, because if I'm subtracting something and it was not trend, I will not get a flat line. I get a flat line, it means there is a real trend. You see, it's science. It works. And then you see actually at the end of this region, there is a tendency to leave the straight line, and this is where the bullish behavior starts, because this thing basically goes back. It goes back here and repeats itself, right? It's like a pattern, a repeating pattern. And this also allows us to compare the different cycles in a meaningful way. And when somebody says, oh, this cycle looks 2017, this is 2017. It doesn't look anything like that. Okay. It did look much almost like a carbon copy of the last cycle up to this point where there was a divergence. Because actually the last cycle, we kind of had a double peak and we peak early. There was a lot of things going on early on. And so, this growth was very, very fast in the beginning. See? Now, I'm not worried yet, because if you compare it with other cycle, okay, there was a crazy growth here and it was a correction. This was a 2017 cycle and it went up, okay. You can say that these are similarity, but not quite, right? Because we didn't have this almost explosive growth and then this huge big correction. It's much more muted, right? So yes, there are some similarities, but it's not like a one-to-one similarity. So I think we are pretty, it's as this has its own personality. We had the main difference is this: we were already there in a sense, right? So most of, like, for example, take this almost textbook cycle, right? With 2017, we stay close to the power law, and then at the last minute we left. Then we had this correction. We kind of, you can say, we continue to be on the power law overall. But then you can see, you can go here. You will have to jump up, right? If you want to continue to see how this feature looks like that feature before. So this is where the continuation of the 2017 cycle went. When it started to go up, and again, new correction. It's not like always straightforward, right? We go up, we correct, we go up faster than before, then we correct, then we go up again. It's not one single exponential like I'm trying to describe here. It's a complicated action, but characterized by times where the price really goes crazy, and then it kind of stabilizes, and then it goes crazy again. So, I will not say it's worrisome. If we continue to move just along the power law, it's not worrisome. It's still okay. It's still great, right? We're still going up, but something is different in terms of bubble behavior, right? That is the component, because right now we are working under this idea that there are really two signals, that maybe we are operating, we are working together somehow, and they are maybe influenced by each other. And that entire topic needs to be studied better. What is the interaction between the general power law and the bubbles? But in a simple way, you almost can think like a general trend plus sine oscillations. We are decaying, right? It's not a bad model to think it that way. And so we are still okay, because the main idea, right, differently from the 2017 cycle, is that it took a long time, to start to be bullish, and then go actually closer and closer to the power law trend. We were close to the power law trend anyway, right? Because mostly all these happened. It was a deviation from the support. It was due to the ETFs. And then we reached the power law. We didn't like it because it was not supposed to be there. The price corrected and didn't go all the way to the support. It did go last time because, see, something similar happened there. We left the power law early. It was not supposed to be there. There was a correction. There was even a stronger correction. We brought it up all the way down to the support line. And that was COVID. It took COVID, right, to do that. We didn't have a COVID kind of event that brought us back to the to the power law support. So we are already kind of there, kind of already in a semi-bullish behavior. So it's taking its time, right? If we really want to, we are supposed to go there, and everything is repeating itself. And people can object this and say, but there are all these new things. There is the Trump administration. There are the strategic reserve. Yeah, okay. All these things will be the thing that we need to actually go there, because nothing really changes. It seems big, it seems large, simply because it's proportional to where Bitcoin is right now. Last cycle we had FTX, and it was the first good news, and there were many different projects, right? It seems that there was a lot of activity in the space, and then many of these projects turned out to be crap, and we actually corrected. I'm not saying that will be a negative aspect to the strategic reserve, but it is not even, it's not what people think it is that is going to push us away from the power law too much, besides what is already doing. These are only confirmation that we are going in the right direction. At least this is my understanding that is coherent in how I see Bitcoin working. Then, the data will prove us wrong or right, that, oh yeah, okay, this time we are leaving the power law forever. We're going up, with an exponential fashion for the next 10 years or whatever. I don't think it's going to happen. I think this picture is going to repeat. But we are scientists. We always, leave a last word to data. Let's see what data shows. This is the picture that we created based on the big assumption, right? If everything repeats as before. So right now, if we continue along with power law for a little while, I calculated it will take all the way to about June, So if you see here is basically the intersection between this growth that is more or less exponential, and imagine we continue to move along with power law and we arrive here, we are still on track, right? And then after that, we do want to see a much more bullish behavior. Basically, we need to go about, at least now, by the time we arrive here, we will have to see even more bullish behavior. But if let's say we start from today and we want to go to 200,000, we need to do 2 times as better as the power law. So right now, the daily returns are about 0.1% every day because of the power law alone. The power law alone will bring us to 130,000 by the end of the year. That is 0.1% a day. If we want to reach 200,000 or higher, we need to do twice as good, about 0.2% a day. And right now we are not doing it because we are basically going back to the power law. So we need to see something much more bullish. We kind of did that early on when we were following this straight line. You see, it was like an exponential behavior. We were actually going pretty fast. And so right now, we need to go more like this, right? But it could be that we do it for some time, mostly because we already cover a lot of ground, and then maybe by here we start to see something much more bullish. Let's see. Okay. Yeah, this is, so it looks good. It doesn't look as crazy and as bullish as many people wanted to claim, right? And some of these claims, like, oh, we're going to 500, we are going to 1 million, we are going to be less and less credible as times goes by if we follow. First of all, if we continue to stay on the power law, even my claim that we go to 200,000 starts to be not right? But these other claims, they are ridiculous, right? More time passes by, more difficult is going to reach, right? Bitcoin will have to go crazily fast, even faster than it went ever in its history. So right now, more days are passing by, more of the other models are being discredited, right? Or everything else. I would say we almost have evidence right now that Plan B model, it's ridiculous, right? It depends on which version you use, even if, actually it was supposed to go to 1 million, but it's the average value for the cycle, because it's not even the top, it's the average value what stock to flow model predicts. 1 million average if you use one of the version. If you use the other version, let's try to steelman his claims, we go to the 500 prediction, but even the 500 prediction it seems quite impossible, right, from where we are right now. But okay, let's continue to observe what happens. This is why we do this show on a regular basis, so we can compare it. All right, so this is the 3 cycles, and now they look like. Now, I have this other indicator that is what I call the bimodal indicator. And the main idea behind this indicator is that really the best way to understand Bitcoin behavior is to divide the stats into 2 regions. I'm going to take this. I added some moving averages. It's to divide the region where we are above the power law and where we are below the power law. We already done some studies that if you describe every time we leave this blue line, right, you describe the deviations as percentage, but then you divide them by volatility that accounts for this decay. A very nice, precise pattern emerges. It's almost like shocking because you can see it's kind of illustrated here. Maybe I should show you this graph. It's more remarkable when you scramble the order of the data points. In that way, you are not fooled by the periodicity. Then you see there are really 2 regions. They dot accumulate themselves in 2 regions. One region that is above the power law and one region below. But you kind of can see, I can show you that kind of here. See, this is one of the indicators that we have where we take the deviations from the trend here. Let me maybe show it like this. See, really bimodal, right? So here I'm taking the deviations from the trend, and I want to actually normalize them. So there are different ways to do that by the volatility, okay? So if I do that, it's even more clear because all these peaks, they became, let me take these for a moment away. You see, they are normalized, they are similar heights. See, look at this, similar heights. And you have this green area and red area, green area and red area. And we spend very, very little time in between. It's almost like a switch. We go from one mode to the other. It happens almost instantaneously. And so it really doesn't make sense to describe Bitcoin as one single event. We kind of do it with the power law, but the beauty, and it works because kind of a power law goes in between these 2. So this blue line, the white line in the middle, represents kind of a compromise, kind of a middle between these 2 regimes. And this is why it works so well. It's kind of interesting, right? But that is what happens. And so you see, right now we are here. We switch regime and we are here, and we are in the early stages. So we are supposed to climb where this red dotted line is, right? We are supposed to climb and then kind of stay there for 2 years, basically. And then we correct a little bit down, we go down and then we switch and we go to this other regime with this the bottom, right? And you see, it's very clear picture that you have 2 regimes. And so this indicator here is supposed to represent that as a price action. And so basically we have this regime where we are at the bottom and we describe the deviations as normalized because of this volatility. So what I'm representing here in these kind of shaded regions is the general trend that is relevant for that domain, for that mode. So this general trend is this dark line. So the bottom line represents kind of large deviations, negative deviation from this dark line. But this dark line is really like the power law, is the real power law in a sense, during this 2 years time when we are not in a bubble. So you can say when we are in a bubble and when we are not in a bubble. So you can see when people say, oh, the price could be anywhere, between here to there. Is this what your model says? No, it doesn't say that. this is what people they don't understand. The models say the most likely place where we are is this. And when you actually go and check the data, if you describe it in terms of these deviations, normalized deviation, it's true. Like almost like 80-90% of the time during this period, we are confining this region. And you can see it's a very narrow region to tell how the price can be confined within that region. It's amazing that Bitcoin does that. And any large deviation from this general trend is something that needs to be corrected, because the price doesn't want to stay there. See, so this is how you interpret then the bottoms as large deviations from this general trend that go here. I'm depicting two standard deviations in terms of volatility. Same thing here. If a deviation is too large in the opposite direction, where we are leaving this green area, then it needs to correct that, like it actually did. And now here, of course, it's okay because it's preparing to leave and go, this regime where, maybe I should color yellow of a transition, when we go from one regime to another. So right now, okay, we are in this red regime. Now, in the red regime, what happens is that we also follow the power law, because there is like an equivalent power law. It's higher. It's as the same slope, but it's higher because, the general returns are higher. And so, like I said, this blue line represents a kind of a compromise between the two. So the general returns are higher. We follow the power law in general. And then the deviations from this power law are nothing else than are associated to the fact that the volatility is high. The distribution is also relatively, it's a kind of different, because here they are much more symmetric. You have a kind of an equal chance to go higher and lower. Here, usually the deviations are decaying, like this, okay? And so it's farther and farther, as you go farther and farther away, is more likely when you have these deviations. But you see, you have to be careful about this interpretation. The peaks are associated with this very, very large deviation. They are going to happen. It's because it's still an exponential type of growth, right, during this time. So at a certain point, we will reach very large deviations if we behave in this way. It's not just like a random all over the place. They are kind of time-like, they happen at very precise times. But from a statistical point of view, because statistics doesn't always describe dynamics, right? So there are two different things. You cannot capture a lot of dynamical things using just statistics. Statistics is one approach. Then you have also to understand dynamic. Dynamic has to do more with time, when things happen at a certain given time. So at a certain given time, it is usually, this, like I said, was unusual because we had a double top. But usually at the right time, we will have the right deviations. And these deviations are about two standard deviations from this general trend. So it's a much, and these are what you need to describe the peaks, just large volatility, local volatility, where the volatility is much higher, deviation from this power law trend. And so then you can explain why we have these bubbles, because they're usually much more at volatility because the market is more active, whatever reason, you get these large volatility, large deviations. And this is how we obtain, right? This is why it can be all simply described by added volatility. And if you go back in time, because we are using these deviations that are corrected for volatility. There is much more volatility here, and this is why you can get these large deviations from the trend. But the volatility kind of remain very similar in these regions, So this is a beautiful model. I think it's one of the best way to represent the Bitcoin behavior that is by model. And it's until we have evidence that we are not doing that anymore, I think we should continue to see Bitcoin in this way, having two modes. And right now we are strongly in this mode where we are going up, where this mode that is exponential growth. Um, added the volatility to this power law that is a higher power law. So in this case, for example, the reference power law, if you want to use this understanding, it's about 117. So we are in this region here. So if you want to compare it, you look at regions where we were below that reference power law, like here or here or here. So we are moving towards that much more exponential behavior. Or here, for example. It lasted much longer here, right? Anyway, the other thing I like to look at, to have a feeling for what is going on with the market is the liquidity. So let's go to that. Okay, and again, if you follow me in my previous discussions, we created this model that is, every model has its strength and weaknesses. This model is relatively, it needs to be taken with a grain of salt, because basically what it does, I look at the price, I took a different measure for liquidity, different M2s, but also Federal Reserve, different measure of money movement around the world, not just the United States, but global, so all the world. And then the relationship is there because it's a clear line, right? It's a fuzzy line, but it's not all over the place. There is a clear trend, but it's difficult to model it mathematically, because it's not, usually the simplest models is what we choose. This is why we want to see, is there a straight line between the data in a linear chart? Is there an exponential? Is there a power law? You get a straight line in a log chart. And then the equation is simple, the model is simple, right? It's much more reliable. If you have something complicated where you have to add more and more terms, etc., it's not reliable, because you don't know where the signal ends and where the noise starts, and so you have to, it becomes more an art than a science. You can still use science, but you have to decide where to stop in modeling, much detail, because otherwise you can model every single little bump and curve, So what is the real essential data here, right? So this is what this purple line tries to do. It's still, I prefer it to simply superimposing the global liquidity. We can still do, but you always try to find patterns, and say, okay, this matches with that. And people have done that. For example, there is this graph where you shift the liquidity by a certain amount of weeks, and then it looks like the liquidity is going down, and it kind of matches how the price went up. That actually, it's weird, because now the price is going up, right? Does it follow that? Not really, So it's pattern matching and looking for Jesus on a tortilla. This is why I don't like to superimpose two things. I prefer to make a model out of it. So this purple line is supposed to be the price for Bitcoin if it depended only on global liquidity. And so you can see it's it's much undervalued, right? So right now it's supposed to be 35,000. And so there is, what is the interpretation of that? The main interpretation is that if we go to previous cycles, every single time we had a bull run, the purple line was above the white line. The white line is the closing price, right? And here, like always, we have a power law. The red line is the power law, the support line, and just a very large deviation from the trend to give you kind of a range. And you can see, every single time we had a bull run, we had a lot of liquidity. The price was actually undervalued relatively to the liquidity model. And then you could see that we could almost identify the tops by regions where the price was highly overvalued relatively to the liquidity model. It was almost like a kind of a canary in the mine detector, because it happened much early relatively to the peak, but kind of indicated that this region was not supported by fundamentals. And this happened over and over again. Okay, the only exception, it's the first bubble that is not associated with the halving. And this could be explained by the fact that Bitcoin was only $30, so it took like just few large whales to push it around. It didn't need global liquidity, right, to do things. But the point is that right now Bitcoin is so large that the main worry is that unless we have large sum of money coming in the system, we are not going places. We are not going very far. So the question is, yes, there are, of course, people buying Bitcoin right now, right? We know Sailor, we know the ETFs, etc. But are they by themselves enough to push the price to even the target, the modest target that we mention all the time, it is at 200,000, right? That is the big question mark that I have here. Because basically what happened, and I have explained this many, many times, is that, for some time it looked like they were going to cross because the price was correcting, the liquidity was growing, and then they decided to go instead of crossing here, I was kind of expecting, they went opposite direction. Like if right now, if they continue to do that, right, let's say the price continue to do that, it's kind of interesting scenario to consider. We will not even be too low relatively to some of the prices that we were experiencing during that time. It will be 52,000, right, Bitcoin, and the liquidity will be much higher. And then we will have a scenario that was similar to what we had before. Then maybe we will start to see a correction. This is not what happened. This is kind of fantasy scenario. Now I don't want to tell you it's turning around here. I see a little bit of rounding of a bottom there, because every time I say that, right, it happened already other two times. Then it continues to go down. So I want to see liquidity going up in a consistent way before thinking it's actually turning around. Right? It's not going down at the moment, but there is no confirmation yet that liquidity is there to support the price going up. So that is the main concern, right? It's a big question, and it doesn't seem to make the price go down too much, like some of these catastrophic scenarios that some people have mentioned before. I don't want even to talk about it. Doom scenario, right? Where it was not doom scenario, but it was predicting Bitcoin going down all the way in the 60s, 70s, something like that. But and the idea was, if I shift basically these liquidity, if I shift it by a certain amount of time, then kind of matches the price. But you kind of see it here, right? Like here, if I shift it by a certain amount, this will match that. But you see now it's not doing that, right? Because we were supposed to go down, 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 down. But anyway, I don't see any. It was more like a curiosity than anything else. It's no indication that is going to happen. It's more like we are following very closely the power law. And like I say, we are not going to 200,000, at least not in a year. if we follow the power law, right? We are still going up, but more like another 30% by the end of the year or something like that. Okay, 35%, something like that. Okay, so I think we can keep it here unless there are certain specific questions. I have so many indicators. We can very quickly look at MicroStrategy. I think what we have to say with MicroStrategy that we left this crazy bullish behavior that we had for some time, where we were deviating from the power law. You know that I have this indicator that basically is some kind of a power law relationship between MicroStrategy and Bitcoin, that is the orange line. And we kind of left it because we went exponential for some time. The price was really leaving the model drastically, and then it went even more exponential when we had a correction. And now, beside this, this deviation, just by looking, by inspection, it seems that, you can even see the distance, right? So if the distance between the model and the price it's similar, then it kind of follows the model. I don't know I can maybe add it to the model, these two components, and see if it continues to behave in that way. But maybe we can treat it just like an anomaly. So I don't know how to reconcile that right now, but in general, yeah, maybe as deviations, we can calculate it as deviation and plotting them. I was trying to do this here at the bottom, but I need to work better on this. But right now, we'll say because the distance is similar, there is no many of these things, they can be caught by eye, right? You don't have to do like sophisticated analysis. It's kind of following the model, maybe with some amplification, right? The model already accounted as some amplification of the price, right? It already includes about 30% increase relatively to Bitcoin. So basically, as Bitcoin goes up, you get a 30% increase due to this relationship between MicroStrategy and Bitcoin. Is basically the leverage that I observe, by just plotting the price of MicroStrategy versus the price of Bitcoin. During these exponential periods, you can see they are deviating. They are going up. See how this gap between the model and the real price is blue line. It became larger and larger and larger. And they knew it was not sustainable. And so there was a correction, and now it does follow, kind of closely. Then we have, the clock that we can also look at. So I like this clock. This is it's a representation of the Bitcoin price in this type of coordinates that is called polar coordinates. This was actually an idea by Rational Root. He didn't invent the polar coordinate. It's something that we do often with data that repeats in time. It's like, I didn't invent the power law. I just had the idea to use it to describe Bitcoin, but it's a big deal, right? So this is why he should get the credit. But my addition to his work is to add the power laws, the two model. The blue line here is what we call the full model, where we are trying to follow the peaks, the bottoms, and the red line is the simple model. And the contribution is, without adding these, you don't understand why you see this beautiful regularity, this beautiful spiral of a price. You see it because Bitcoin is a power law. He kind of write to this description without having the theoretical understanding of it, right? We are giving the theoretical understanding of it. But the reason why there is this precise pattern is because of the power law. And I'm grateful for him because it's another cool way of showing the power law. It's in fact they are called power law spirals. Didn't invent them, this term. There is such a thing. There are this thing called power law spirals. And Bitcoin, if you want to put together the periodic pattern and the power law pattern together, this is a perfect representation of this. And according to this, right, we are beyond the 9th time. That is when we go to this more frenzy behavior. Usually during this time, there is a crossing, right? Because remember, the blue curve is supposed to represent both the bottom and the top, right? So it follows the power law behavior, not the simple model, because the simple model, remember, it's the middle, right? So it kind of goes to the bottom, then necessarily at a certain point they will cross. So you see they kind of crossed here, they crossed here, they cross there, right? Because of how the clock is made, the crossing happens later and later. They will cross somewhere here, I think, at a certain point, somewhere. And then the blue line will be on top of the red line. That didn't happen yet. It should happen somewhere at a certain point. And the blue line is kind of projected in the future and is telling us where it's going to peak. That is around $200,000. Yeah. It's very interesting. Right now, again, we seems to follow, right, the behavior in the past. It's not too different. Okay. Let me take some questions. All right. Happy Friday. Saxon Smith, every single time. He's my more consistent follower, is always every single time here. And I'm very glad that he's also here today. Yeah, so where we think the top is. So everything, there are different ways to do the calculation, right? And I show you before, because every single thing that I do differently from other people that, make just some claims or it's all based on feeling. We try to calculate everything because it's the only way to really to be objective, right? And of course, you have to understand everything we do in math and in physics has always some assumptions, right? There is some assumption behind it. One of when we started to study these deviations from the trend, right, we saw some regularity. The deviations can be described in different way. Like usually you take the price, you subtract it from the trend, and then you can leave it like that. But the problem, right, if you have like let's say the theoretical price says, oh, it should be $300, and the real price was $400, right? And the difference will be only $100. If you do it with 50,000 versus 45,000, now you have thousands of dollars, right? How do you account for that? So you have to divide it by something to get some kind of a percent, right? So when you divide by something, like you can divide by the trend, so price minus trend, divide by trend, and then you multiply by 100, and you get a percent, what is called percent difference, right? Or you can divide it by the price, or you can divide by the mean, maybe the mean between price and trend, or something like that. Or you can take out that decay. So I like this one a lot because if you account for the decay, exponential decay, then you see this very, very regular pattern. So it's why we have different options, because the entire idea of using all these indicators is that different indicator gives you different insights. So if you do it in this way, it's really cool because now you have some kind of, you can call it almost like a risk indicator, right? It goes from 0 to 100. We normalize it, right? We make sure the tops are 100, the bottoms are 0. And you can see where we are. Right now, for example, we are around 72. So we are not close to the top, right? But we are in this kind of orangey area, that is usually where we are when we start to go there. So this is pretty cool indicator, and we are very similar heights, right? That keeps the oscillation between a very precise range. But see what I was telling you before with dynamics. There is a very precise pattern in time, that you cannot deny. The stats cannot reproduce these dynamics. You need to have both. And one thing you can do, you can divide by, if you, for example, use trend, then you see this decay, right? You see this huge decay. So this is what I was trying to tell you several times, that the first peaks were enormous and the other ones much smaller. Now, you look at these and you think, okay, it's cool, they're going down. It's more difficult to push Bitcoin, it was more difficult easier to push Bitcoin around when it was $20 than when it was $100,000, right? You need much more money coming in. So it's obvious that these deviations are smaller and smaller. But the surprising thing is, and we don't do it in this way, we do it in a more mathematical fashion, okay? But it kind of gives you a feeling, of how this is done, right? Right now, if this I didn't use the log, there is not really, it's difficult to see if there is a pattern, right? It's kind of going down like this. But the beauty of it, if I take a log, this is why we like logs and stuff like that. This is how it looks like. Continue to do this. Let me go back here. And it doesn't seem much, right? There is this like bimodal situation that I described before. But let me do this, right? So if I zoom in in the peaks, let me redo this line. If I zoom in, now, kind of with my eyes, I can see it's kind of straight, right? This, if I see, there is like a pattern here. There is it seems kind of regular, right? There is like a straight line. And actually, see, this is now TA, like some people in TA, right, like to draw lines and stuff like that. But there is never really a strong mathematical reason to do that. The mathematical reason to do this is that I'm after a mathematical pattern. If I see a straight line in a graph like this, that is called a log linear chart, it's an exponential decay. Okay. Now, do I really use the top? No, what you will use, you will take maybe a little cluster of data, around there, maybe 2-3 points. You can average them because, you want to smooth maybe a little bit the top. But you could also take the exact top and draw it in a paper and then do a regression through these data points. You will try to use a real, legit mathematical method. I'm doing here like a poor man version of that, right? I'm trying to kind of eyeballing it, but it's not how you do it, but just to give you a feeling, right? So if you say, okay, there is a regular pattern, it looks like a straight line, so it's supposed to be an exponential, and the idea is, listen, I don't know why I get this exponential, but it's another regularity in the data. I'm going to take it seriously. I'm going to extrapolate it and see what it means. If it continues, right? If that decay continues to be true, where does it lead? And what you'd get, right, if you go, because that is the other piece of information, that we have peaks at precise time in the cycle. And this will mean the end of this year. So let's go all the way to the end of the year, right, about December. It could happen before, it could happen later. If it happens before, you see, closer and closer we are, let's say farther away we are from the end of the year, higher will be this red line, right? But if we go, let's say we take the worst case scenario, we go all the way to the end of the year, then we look at the deviation, and get on something around 70 here it tells me if I move it, 75. But when I do it in the proper way, I get more like 80%. I wrote an entire article on how I did this, but basically this is the simplest explanation. And the way when you get a price is that you go here, right? Here, see in the power law, now we go, see these are deviations, right? This is the price. You go there, you look at what the price is. We are supposed to be at 135 by the end of the year, just due to the power law. This year is standing the power law. So the power law tell us 135. I get 80% deviation. This is how I get 200,000. You see, much better than just expressing my feelings, about this topic. These are, and I don't know many other people that do it in this way, right? That do it in a very consistent, very logical fashion. Now, it's all based on one assumption. If that assumption is not true, then this prediction will not be true. But also that is the beauty of doing science. What will make the prediction of being true, that this assumption is not true, right? It's an interesting pattern. It's one of the weakest components of entire model, because one thing is to talk about the general trend that is supported by many different tests, thousands of data points, and another here kind of saying, well, it looks like an exponential decay. Exponential decay, by the way, are something that you find in nature all the time. So it's not like a strange pattern that something is decay exponentially, and you can measure it and it seems consistent, so it's based on real science. And so this is how we get the 200,000. Now you can do it in other ways, and you get similar result. Some other ways are a little bit more optimistic. One way you can do that, if you're curious, I can show you, is this one, where basically you can look at the deviations. The returns. So, and the way you do it, you choose to average the returns over 1 year. So basically, this white line, what this white line shows is, this is another indicator that we have, is at any point you hover over the graph, it tells you, if you look backwards 1 year, what was the average return per day up to that point. And the beauty of doing it in this way, look at this, it's an incredible way to actually identify the peaks, the bottoms. Look at this, bottom, peak, bottom, peak. It's really visualize it as an oscillator where to find the bottoms and the peak. And there are very cool patterns, like all the bottoms are very regular, right? Because of these bottom that we observed before, that the price doesn't seem to go below a certain value. So it creates like a parallel pattern, right? A consistent pattern at the bottom. And the blue line is the power law, is a trend that is identified by the power law. If we were following the power law, this will be the returns, the blue line. And I draw, the yellow line is basically, if you're above, you have a gain. If you're below, you have a loss. And these different color lines represent a different amount of returns that you need to reach certain goals. Like, for example, to reach the 200K, we will need to be consistently above the green line, and we are not there yet. So I was telling you that another way of calculating the peak is actually measuring these decays. See how these returns at the peak here, see here, we're also going down. This is not the price deviations, these are the returns. And you can measure them relatively to the trend, to the power law trend. And when you measure relative to the power law trend, you get an exponential decay too. But now, you're doing it in a slightly different way. You're not you're measuring the returns due to the how you observe them relatively to the price, and then you compare it with the relative return due to the theory, and then you see a similar decay, exponential decay. They are related, but not exactly the same. Then you can project it to the future. If you project it to the future, you get a projection that is similar, that is around 250,000. So it's a little bit more optimistic, let's say, but very close numbers, very close numbers. And here I made a table where what to expect, in March, due to the power law alone. The power law alone will be 180,000 in March. If we compound this relatively, basically the current, with current returns, like over, the last few days, we go to 117, and so we are okay. It's just that you see here, for example, at a certain point we started to go up, right? So this where we were the relative place where we were in the previous cycles. Here, then we started to be much more aggressive and go up. Okay. So basically, to answer your question, I know it took a long time, but it's 200,000. It's a conservative calculation. MicroStrategy deviation may have to do with option. Yeah, I think when the deviation from MicroStrategies, when you have this large deviation from MicroStrategies, it's mostly speculations, right? And options is one of the tools, because there is much more. There are Bitcoin options, but the market is not that active. But MicroStrategy people invest a lot, speculate a lot, and they can create large deviations from the trend. But it's kind of interesting when then the deviation go back to the general trend. So there is a power law trend between Bitcoin and MicroStrategy, and it has been violated for a little bit, and then it corrected itself. We will have to see if that trend continues to be there. Okay, let's look at this question. If liquidity stays low and Bitcoin doesn't go much higher than where we are today by the end of 2000, what will you think will be in that scenario? I hope, there are different scenarios, right? We continue to do what we have done in the previous times, right? There are these bubbles that are diminishing return, right? They are diminishing its heights, but they still are bubbles. Like if everything happens with that decay, we go to 200,000, right? That is scenario number one. Another scenario that is based on how the data have been actually since March, right? Because we touched with power law, we corrected, we went back to it, we are hovering, we are following the power law. It will not be a bad scenario because we are still doing about 40% a year, right? And it's better than any other type of investment. There is enough liquidity where if we oscillate like that, I have this, at a certain point we will discuss it more in details, but I have an algorithm that is working with another company on this project. But we are trying to use futures, and your Bitcoin as a collateral to trade this volatility. There is still enough volatility in Bitcoin where the assumption is always the same. This is why you can do it with Bitcoin, and it's much more difficult to do with any other asset because you are counting on two things. First of all, that you have that support line, and the second thing is that Bitcoin goes up, that the price of Bitcoin goes up. So if you do it correctly, you can use this knowledge and this information to actually extract volatility and grow your Bitcoin. It's not something that everybody should do, but it can be done. That is the beautiful thing about Bitcoin. It is both a very stable asset, more stable than other assets, and it continues to grow, and it has a lot of volatility. So it will not be too bad, right, as a scenario, because we do not have the crazy volatility of the bubble. That part of the reason why people follow my channel is we have this idea that maybe we can do something at the top, right? We can sell partially the Bitcoin, maybe we can we can buy put options. We can use that volatility. The entire idea is not necessarily do these versus these, is what do we do with all these large deviations from the trend? Can we use them somehow, right, in a strategic fashion? If we don't have that, okay, we will have to make another plan, or change our plan a little bit, but there is still enough volatility where you can do a lot of things. Now, the other scenario is that people are expecting a bubble, the bubble doesn't happen, and some people take it as a negative signal, right? They're not happy enough about the power law growth, and maybe they sell because they want to do more aggressive things. I don't know. Could that scenario be? That is maybe the scenario that worries me mostly. But I still trust Bitcoin enough where even if that happens, then people will adjust. Will still, the fundamentals are there. The bubbles, remember, from a power law point of view, the bubble don't exist. We go up, we go down, we go back to the power law. The result is the same. So it's just now will be more evident there are no bubbles. What some people mention when they say there are no more bubbles, they think that it's actually the opposite. They think there is an eternal bubble. This is what they really mean. As some of the people that say there are no bubbles, they really mean that. They think that we go to this exponential behavior and we never come back. Is that possible? Everything is possible, right? Right now, the data doesn't support that. If anything, we are more like in a much more muted bubble than we have before. So, all right. Those spiral have a Fibonacci relationship. It doesn't look like to me. Now, there are many types of spirals, and the Fibonacci spiral is one type, but it's kind of in the same family where, Fibonacci has to do with also somehow scaling and proportion of things, but it's not a power law. And so it's kind of in the same general idea, but it's not related. A power law spiral is basically, you can write an equation that looks like this. In fact, I can write it in the comment. It looks like for example, for Bitcoin, you will have a price is proportional to rho, where rho is the radius of a spiral, to some kind of a power. Okay, and yeah, like this, and then the way that you show the rho in this case represent. So actually, let me rewrite it. Sorry for that. I'm trying to reconstruct things from memory. So rho will be the price because it will be the radius, right? But the rho, so rho will be, it's a Greek letter that we use for the radius, right? Will be proportional to the time. But in this case, time will be expressed as an angle. So this is where the spiral comes from. Theta to the m, okay? So forget about the previous equation. Look at this. Rho is proportional to theta to the m. And m is the same m than the power law. But theta now, it's time that is normalized to the period, right? So basically, the time goes from 0 time to 2 pi time. But what that means, 2 pi, you get 2 pi every time 4 years are passed by. So it's a way of describing time with an angle. It seems like such an esoteric idea, but it's not, because this is how a clock works, right? In a clock, you have, let's say you have a 12 hours hand. Every 12 hours, you have 2 pi, right? So you make a one-to-one relationship, right? Every 3 hours, every 15 degrees, 90 degrees represents 3 hours, right? 180 represents 6 hours, and so on. So same thing with this, right? This is how you actually create these clocks. You say, all right, let me describe time as every time I go around this circle, so 2 pi, it's 4 years. And you can write a code to do that. And then as you will get a circle if a price gold, like if you plot gold looks like a circle. Why? Because it doesn't go anywhere. The price looks more or less the same, in particular if you take the log, right? Because in fact, we are taking the log of the price. If you take the log of the price, and then you draw a similar spiral for gold, it looks like a circle, like overlapping circles. It doesn't go anywhere. While if you do it for Bitcoin, it looks like this beautiful, beautiful spiral, because the price becomes bigger and bigger. With a stock, it will grow exponentially, but it's such a slow growth, because many people think exponentially means fast, right? But it depends on how fast the exponential grows. And with most stocks, also, we look kind of like gold, because we don't go very far away, So if the growth of a circle, of a radius, is a power law, it goes with m of time, then it will look like what is called a power law spiral. The Fibonacci spiral is a spiral, but it follows other rules. How fast the radio changes is defined by the by the Fibonacci sequence. They are related, but not the same. And these comments say, we are not invited to the fans ball, but Friday learning about power law is all what we need. You're probably referring to the New Year's party at Sailor's home. Okay. I think I will have, I think if I sit down in a room with Sailor, he probably will be one of the best conversations he ever had about Bitcoin, because he's supposed to be an engineer, appreciate physics, right? He makes all these analogy, and I am the only one that describes Bitcoin using real physics and math and things that are really relevant to the things he says, right? Even as this quote, because a lot of people have this intuition, very powerful intuition. He compares Bitcoin to a city, and cities grow like power laws, and it makes the analogy much more powerful, because now you're saying, okay, look, there is these two social phenomena that are growing in similar way, and there are very deep reasons why that is true. And I think a lot of what Sailor does, there is a ball tonight. What is that ball? I don't know what is that ball. Yeah, I thought we were making a joke about Sailor's party. But in general, I think sailors will appreciate. I don't know, maybe there are some reasons, right? He doesn't want to commit to a particular model, his general goals are different, But yeah. Anyway, guys, thank you so much to participate and to follow me. And I will try to keep these regular updates and maybe look at different angles and different data, but I'm trying to avoid, the TA discussions, that some people do, and base almost all the analysis on math, because there is so much to learn about Bitcoin when you do it in that way. All right. Thank you so much, guys. I will conclude here. Have a good night. And let's hope that Bitcoin becomes exponential, at least for 1 year. Let's see what happens. Bye, guys.